Hey everybody, this is Dr. Tom Carr, aka Dr. Stoxx, and I'm just going to do a quick video here to kind of get everybody up to speed on what I'm seeing in the market today. We've got the Fed coming up on Wednesday. That's the big pivot. Likely, we'll see a little bit more upside between now and then some selling on the news taking us into next week. And I think we're heading into what could be a week or two of some modest give back to the market, some pullback, some consolidation. I'm just seeing that starting to set up in both major indexes and some of the sector trends. So I do have a few trades on alert, however, that I'm kind of working on a little bit. So I suspect we'll get into one or two more in each of the rooms before we're done trading today. But we probably should focus more this afternoon and probably even more so tomorrow on positioning us against that pullback. Not that it has to happen. I'm just saying that that's kind of where we're going right now. And I wanted to do this quickly so that I could get back to trading and make sure that we're on board before things get too carried away to the downside. So let me just go over a few charts with you and take a look at what it is I'm looking at. So here is the S&P 500. This is the futures contract, the daily chart, and you can see we're working on a lower double top. So a double top at all-time highs is, significant to mark. But if we have a double top that is a lower high, then that's even worse, even more bearish. And then to make matters even worse, we've got bearish divergence and a fair bit of it on the second top here. That's what we're printing today. We had a little bit of a blow-off top on Friday. Market went up, came back down into the close, gapped up a little bit this morning, and it's been all downhill ever since. And I don't think we're going to recover back the rest of the day. Now, tomorrow could be a little bit of some back and fill. There is some anticipation that the Fed might be a lot more bullish, dovish than we expect them to be, but I don't think that's going to be the case. I apologize for some background noise. We're doing some filming over here. My wife is the filmographer, and she's adjusting the lights and everything. So just another reason why I didn't want to do a full session today on the mic. All right, so double top, lower high, bearish divergence, rollover into the next couple of weeks is the likely path of least resistance going forward. Now, we do have some near-term support not too far away. We've got the 21 EMA, the 50 SMA, the bottom of the LRC. Those are all areas that can catch any pullback and would probably give us a few days of a little bit of reprieve. But I think we'll probably end up, before we get to a decent rally into the end of the month, we'll probably end up down somewhere below 6,700 on the S&P. Just best guess. I would be very happy the market didn't do any of that, but I'm just saying what I think it's going to do over the next few days. Now, here is the NASDAQ 100, and the good news is that we don't have any bearish divergence on this little lower double top, but it is technically, again, the same pattern, lower double top. You can also see that the volume on the way down on that ABC pullback that took us for a ride southward for about a month was on heavy volume, and then the volume on the rally back, which is what we've had for about a week and a half now, has been on declining volume. In a good, healthy, bullish run higher, it's the other way around. So we should see light volume on the pullbacks and heavy on the rally back, and we're seeing just the opposite of that. This is a bearish print. So again, we can expect a pullback. I think the Fed is going to be the trigger, probably because Powell is going to give us one cut, but we're not going to get as much future promise as the market would like. So I think he's probably going to be very cautious, not saying anything to upset the market, but not also give the market what it really wants, which is, cut on into next year. So I think that's the reason why we'll probably head further south. Now, the small cap index, they're usually the ones that are the canary in the coal mine. If they're moving up against the rest of the market, that's a good sign. It was doing that earlier this morning, but it has also since flipped around. Now, it's up near 52-week highs. So this is a little bit of a different animal. This is a more bullish chart. The volume going up as well is a bit heavier than we saw on the S&P and the NASDAQ. So that's good. Inflows into the small caps is a plus, right? More of a risk on posture by the market rather than a risk off. But Near term, I think we're in for some pullback, right? We've got the blow off top on Friday, another blow off top today. These are classic reversal bars. And what do I mean by that? I mean that the open of the bar is within the previous range. It traveled above the high of that day to take out the stops and pull in a bunch of new longs. And then it traveled south to close both below the open and within the range of the previous day. We had that on Friday. We had the same thing so far, at least today. So those are reversal bars. Typically, when you get a couple of them in a row like this with a little bit of bearish divergence, you're going to see some downside. I don't think it's going to get too much further than the 2150, however, because the strength here is much better than we're seeing in the S&P and the NASDAQ. So price momentum on good volume going up means a soft little pullback coming down, and that's typically what we'll get. Now, we are bearish on Bitcoin. We're already short Bitcoin from last week, and I think we'll be okay with that eventually. It's going to knock itself around a little bit because, there's a lot of bullish sentiment still in Bitcoin, and a lot of folks are seeing this, Tom Lee included, as a buy the dip opportunity. But I do think that there is another leg lower. I could be totally wrong. We might get stopped out of our Bitcoin short. Fine. I'm okay with that happening. We actually have long-term Bitcoin longs and short-term Bitcoin short, if that makes sense. But that's just how we're trading. So I think we're going to get a break of the, I think this is a bear flag, not a bounce, a bear flag. It's been very weak, and the volume's been pretty mixed, but I have to say it's leaning on the bearish side than the bullish side. When that line gives way, we should see another pretty swift swoosh like this one all the way down, likely to about 75,000. Ether is a little bit stronger, so the bounce up was a bit better on a price momentum level, but we're just not able to get through that resistance trend line. And until we get a close above that level and then a follow-through day within the next 2 days to confirm it, it's still a bearish setup. So it's not as bearish as Bitcoin, but it is bearish still. It's not as bearish because the downside momentum was not as strong here as the downside momentum in Bitcoin, and this relief rally has lasted longer than Bitcoin. It's going more sideways than down, and that's a better posture than Bitcoin, but still not very good. Now, here's one that I do like. I do like silver long, and I think we might get long either SLV calls or AGQ shares in either or both of the rooms. And why do I like it? Big 3 bars thrust higher on very good volume. That's the kind of volume you want to see on the upside right there. Heavy volume on the upside. And then a 1, 2, 3, 4, 5 bar bull flag forming here. And if you looked at some of the intraday's lows down here on the 2-hour chart or the 1-hour chart, you're going to see a nice hold of support. And it's just looking very, very, very bullish. So now both gold and silver should do okay if the Fed cuts rates and promises some future rate cuts. Gold, however, will not do very well if the Fed is any more hawkish than the market wants it to be. Silver, however, is a different animal altogether, and there are industrial uses of silver and building material silver, and I think that it's going to do well, especially if, or even if, we get a pullback in the stock market. Because if money's coming out of Bitcoin and gold's not that safe because of the interest rate problem, then silver is going to be a good asset play going forward. So I like silver. Now let's look at a few other things here. We did go long bonds. I got in a little bit early, I think, because we got in right off the open and it was all downhill from there. We're not stopped out, but we have our stop fairly wide, but it is bouncing back nicely off those lows. We've got some bullish divergence working its way in. This is in part a hedge on the Fed, because if the Fed is hawkish, you'll see bonds. If the Fed is dovish, you'll see bonds do pretty well. And they were out with some news about quantitative easing as well. And that's bullish for bonds. And bonds are deeply, deeply oversold in an uptrend, even below the LRC, the linear regression channel. And that's further than 2.0 standard deviation. So I think there's a pretty good chance that bonds will bounce back. So I'm not a buyer of gold here because in part because of the Fed problem, in part because the momentum in gold is kind of petering out. But I like the miners, the gold miners. That might seem counterintuitive, but hey, I'd rather just have gold go up a little bit and the miners leverage that higher, which I think they're set up to do. We had a nice little rounded bottom breakout. We tested the previous highs. There was some bearish divergence. We've played that out already with 6 bars down to the top of the breakout line, former resistance, now support, and it's holding very nicely here. And if you were to look at the 1 or 2 hour charts, you'd see a very nice bullish setup forming. Not quite there yet, but I do think that we'll be able to get on board the miners in one or both rooms. We had NUGT on in the live trading room, but it hit our profit stop. So we were able to move up a little bit on this breakout run, and then we got stopped out on that day right there. Took a little bit of a profit. So we're not in the miners right now, but I think we might be by the end of the day. Now, for some bearish setups that we can harness with some inverse funds, I think the semiconductor space, some of these guys have been really strong and some have not. So NVIDIA's down there, and I haven't really checked to see what others are down there. SMCI, ARM, AMD, some of those I think are on the lower side than guys like Avgo and what was the other one I was looking at? Qualcomm is doing okay. So it's kind of a mixed sector, but I do think that it's printing just slightly lower high or perhaps an equal high, a double top up at 52-week highs. And it's starting to look like it's just a little bit tired up there. Now, it's not a short yet. We're not seeing anything right here that gives us a sell short signal. It's more of a take profits if you're long, but not yet a short. So as I said in the room this morning, we're in that awkward phase on a nice bounce back in the market where it's too late to go long, but it's still too early to go short. That's where we're at today. But doesn't hurt to throw on some at least smaller size hedges, inverse funds. That's what I'm thinking about doing, along with the long silver, long miners, and we can position ourselves into the Fed that way. The software space, CLOU, which is the big cloud plays, and SKYY, which is an even broader form of index fund for the softwares, are all both showing the same setup. Big run down, took out a whole bunch of lows, relief rally back up, tagging the 50 period moving average, and now looking like it's ready to roll back down and maybe even print a lower low below 122 in the case of Sky and about 2180 in the case of Cloud. This one even looks worse. It was a softer run into the 50, didn't quite get up to the 50, reversing today, printing in a reversal, classic reversal bar. Not quite, I'm sorry, because it didn't take out the previous day's highs, but it is printing a reversal bar at the 50, looking a little bit bearish. Technically, when you have a setup like this, you can drill down to the 2 hour chart, the 1 hour chart to see if there's a sell short signal already forming there, and you can play that one short term. But the safest way is to wait until we get a crack of that STL, the supporting trend line, because this does look to me very much like either a big bear flag or a rising wedge, which is only bearish when it breaks to the downside, but they usually do. All right, so there's that. Software space has been pretty good overall. There's some really good winners in that space, but I think it's just time for them to cool off a little bit. Another space that is overheated and starting to look toppy is the quantum space. You've got your quantum computing stocks in here. All of those have been really beaten down and are now in kind of a relief rally mode. And frankly, your IONQ, RGTI, QBTS, they're not looking that bad, right? They had a nice relief rally, and now they're not rolling over. They're printing little bull flags up there. So they might be okay, but some of the stocks in this fund at the top, like Teradyne and Synopsys and others, are a bit overdone. And I do think that the whole thing is ready to come back in. But again, not seeing a sell short signal just yet, but it is printing just a slightly lower high. We've got a couple of red bars. We don't see any bearish divergence just yet, but I'm just keeping an eye on this one. We're already short the home builders, and we shorted them last week, and that turned out to be a good play. It was up, 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 flat, and then that red bar right there was our sell short signal because of the big volume, and it undercut several lows, and it's been downhill ever since. So you can short at XHB, and I wouldn't short any of the individual names in the fund, but if you really want to leverage this play, you can short NAIL. Unfortunately, there's not an inverse fund for the homies. The banks are looking also a little bit toppy, double top, bearish divergence, big red bar today. The volume's still kind of light, but we have a couple hours of trading left. And so that one's looking like that. We could go with FAZ on that one. XLU is probably going to be a buy because it's deeply oversold. Get rid of that. Deeply oversold, showing a little bit of bullish divergence, and it typically is a safe haven when the market gets a little squirrely. Now, just a quick look at some of my greens list. You already have a pretty good idea of where I'm going over the next few days. Not making any big trades just yet, but probably by the end of today, we'll nibble a little bit, add a little bit more tomorrow, especially if we get confirmation. And then we'll just let the Fed play out, and we'll just let the market do its thing, right, with our stops in place. All right, so some of these are on my greens list. I just kind of culled some of them out. VRT, we're long some calls in the options room. SNDK, I got out earlier today on a nice little pop. Some shares in that one. Here's the miners we looked at. Here's one of the top of the gold miners. It's a gold miner. Here's silver. MLM is a nice looking industrial play that has this nice nifty inverted head and shoulders. It's a rather dull play, but you can leverage that with some calls. Here's one of those quantum computers I was talking about. Here's your relief rally, starting to print a little bit of a bull flag right at the 21, and you'll see that same pattern in the other ones as well. XLU, we saw like a couple of biotechs, this one especially. So nice breakout run, 52-week highs, soft pullback, starting to get a rounded bottom above the 21 EMA. This is bullish, 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 and I think you could buy this one. V-side is another pullback setup in the biotech space. Reversal bar at the 21, that looks pretty good. RTX is a defense play. This is a long pullback, right? And it's really not officially a buy until that resistance line gets taken out. Probably should move that a little bit like so, but it does look to me like it's getting there. It's holding up above the 50. Here's another quantum computing space printing the bull flag. NBIS is it's printing a little bullish base down here at the bottom. I'm long this one just as a little speculative or lotto play. Yeah, so some of these energy, quantum, uranium, data center plays got some good traction last week. Some really good traction, some of them. And they're kind of giving some of that back, right? So it did break out of the recent trader range, came back down inside, and printing a bullish reversal, small one today. I like NBIS, however, I'm long, and if you want to join me, you can do that with MBIL, which is your leveraged play. Microsoft, it's not a buy. I don't really like it that much, but I just have it on my chart. I mean, in my greens list, because I do think, just in terms of valuation and in terms of the fact that it's a mag that needs to kind of get its act together, it's probably going to do that pretty soon, and the volume off the lows is good. Here's a few more spec plays. So CIFR, which is a Bitcoin mining play. We were long this one, calls, took profits on that in the options room. Wolf is breaking out of what is probably a little bull flag right there. Not breaking out, it's not there yet, but it's getting there. And IREN, I think, is just peeking out above the RTL today for the first time, and that might be a good sign. And then CLS, we are long in the live trading room via the leveraged version of this. We bought it last week, and it's up nicely today. Guys, I'm going to let you go because I really need to get back into the main room. I will produce this, give you a link, and then we'll look at some of those trades that I just mentioned. God bless everybody. See you back in the room in just a little bit. Bye for now.